Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Monday, June the 4th, 2012. Well, continuation of the trend to the downside today. Candle that's made a lower high and a lower low. A doji type candle, however. So this does set the market up for a potential change of trend. Previous days trading we had this very large black body candle with the sellers strongly committed and in control. And today we've had the market close just by the previous close, which means that neither side are keen. Where the sellers were extremely keen for the previous day's trading, they've lost that keenness, and the sellers have lost a lot of momentum today. Now the market did interact with an area of potentially strong support at 1277 and 1269, and we've seen strong price rejection from that region. We have this large shadow on the bottom of this candle, and that represents upside price rejection and the sellers losing commitment down around that level. And all of this is in strong contrast to the extreme day that we had for the previous day's trading. The small body on the candle denotes that the sellers have made basically no net bearish progress on the day between the open and the close, and that's in contrast to the previous day's trading as well. We've also had the buyers take control of trading for today by closing up towards the high and certainly above the midpoint level. So quite a change in respect to the momentum throughout the trading day, and it does set the market up for a potential change of trend. To the upside, we have strong resistance at 1295, so that's an area that we should be watching. It was previously a decent area of support. The market traded through there in a significant way yesterday for the previous day's trading, but that will offer itself a strong resistance if the market does change trend and begin trading up. In terms of the Fibonacci extension, and what we're looking at is the relationship of the current downtrend to the previous time the market was trending down, and the market closed well beyond the 161.8% level for the previous day's trading, and we've got this doji type candle in no man's land really. There aren't any levels between the 161.8 and the 261.8. If the trend does continue down, then the 261.8% at 1251 should be a level that will be important, but we don't have any signs that the trend will continue down at the moment. The sellers are no longer supporting the trend to the downside. But looking at the Fibonacci retracement of the previous upswing, so we're now in a downswing, and we're looking at the retracement of that previous upswing, and we're now in an expansion phase of that. The market has interacted with that 161.8% level at 1271, and we've seen strong price rejection from around that level. So that does suggest that that is quite an important level, and strengthens the potential for a change of trend to the upside. In terms of Ichimoku, the market remains bearish in all three timeframes, so we're trading below the cloud, below the Kijun-sen and the Tenkan-sen, and the Chikou span is below the corresponding price action, confirming the negativity that we're seeing in all of these timeframes, so a very strongly negative market. If we look at the slope on both of these indicators, they're pointing down quite sharply, and that's reflecting the very strong downside momentum we've had over the previous few days. Very often, as I've mentioned, if a market does rally, the Tenkan-sen tends to be that first place that we see resistance. So the round number 1300 becomes very, very important if this market does rally. And this area from 1300 to 1295 will offer itself as very strong resistance for this market. So a market that's still bearish in higher time frames, but the sellers in terms of the short-term dynamics are no longer supporting the trend to the downside. The buyers are attempting to take control. They've taken control in terms of where the market's closed for the day. They haven't shown a lot of keenness, but there is still a potential for a change of trend, so the high of the current candle becomes very important for a potential rally up to 1295.